Hello everyone, this is Marcel and today we are going to talk about the value-added tax in the UAE. I have Pankaj today with me and we are going to cover some questions. We will highlight the 3 top errors while people returning their VAT. We will cover the top 3 fines encountered in 2018 and we will cover the section of top recommendations. Pankaj, hi, can you introduce yourself?
Hi, I'm Pankaj. I work for Gallon Business Consultancy as a senior tax consultant. I've been working with tax from the past 5 to 7 years.
Thank you, Pankaj. I'm going to ask you 3 questions today. What are the top 3 errors while returning your VAT in the UAE?
The top 3 mistakes that people do while filing the VAT returns is first, when they disclose the transactions which are covered by the reverse charge mechanism. Specifically, people tend to exclude transactions which are covered by reverse charge mechanism on the grounds that the reverse charge mechanism transactions don't have tax effect as such, because you are paying tax and you're recovering the same amount of tax in the same period itself, subject to certain conditions. So this basically happens only when there are import of services, because import of goods always go through the custom and it's always declared. So it's by default it gets reflected in your VAT return. So there is no chance that you can skip the reverse charge on the imported goods, but then imported services is something that people tend to skip. The second most common mistake would be adjustments to the value of goods imported, because the VAT is charged on the CIF amount of the goods, including the clearance, the import customs duty. So the VAT is charged on that, but then the amount that is fetched directly from the customs portal is different from the actual amount on which the tax is to be paid. This is where a lot of people forget adjusting the value of imported goods. And the third error is the use of adjustment columns in the VAT return. The adjustment column is basically used only for bad debts. However, people use it to correct errors from the previous VAT returns that have already been submitted, so which is not actually how it should be used. This could possibly lead to a lot of questions and supporting documents required during the phase of audit, and could also lead to penalties.
And what are the top 3 penalties that you have seen during the 2018?
Since 2018 was the first year when the VAT was implemented, it was the first year of implementation. So the highest amount of penalties that we came across was late registration, which is the biggest penalty that a lot of customers face. And then late registration has cascading effects again, because once you get registered late, you file your returns late, and then you get penalized for every amount of VAT that was supposed to be paid back in time, but then you pay only after you get registered. So these are the 2 biggest penalties that we've come across during the year 2018, and hopefully in 2019 we'll see few more additions to the penalties that the FTA would start levying, since it's already started the process of VAT audit, getting the audited financial statements from the clients and doing its procedures.
And can you tell us about the frame of those fines, starting from which amount ends to which amount?
The smallest penalty could be from a range of 1,000 for late filing of VAT returns, and the highest penalty could be up to 20,000 for non-registration for VAT. And the late payment penalty for the VAT is a slab-based payment. It's like 2% immediately after when it is due. The penalty rate is 2%. From the 7th day up to 1 month from the deadline of payment, it's 4%, and then it's 1% thereafter for every day.
And what are your recommendations to people, what they need to be aware about before they file their VAT?
My top recommendation would be to always, in case you have any doubts, always consult someone before submitting your VAT returns or before getting into transactions, and use the online resources available on the FTA's website for information, for clarifications, and please use the voluntary disclosure only when it is required. The voluntary disclosure is required when the tax effect of an error in the previous returns filed is greater than 10,000. In that case, you can use the voluntary disclosure, otherwise you have to use the normal VAT return and adjust the errors in the upcoming VAT returns. You don't have to use the adjustment column, you have to use the normal taxable value and VAT amount column that is standard used throughout the VAT returns.
Okay, Pankaj, thank you for your valuable feedback. I'm sure that this will be very helpful to people. Thank you for watching this video. If you have any question, please leave it below in the comment section and we will cover it in the next video. Thank you.